What would attract people to buy options in a company being acquired? What is the risk reward? Yeah. So the way that options work is with call options, you can invest a tiny bit of money, and if the stock goes down, you lose just this. But if the stock goes up, you can make like 10 to 100 times your money. It's a different way to think. And it's in the 4th semester of my MBA program. For everybody that signed up, just go to FA44. That's Finance and Accounting Semester 4, class number 4. It's 30 hours worth of options and hedge fund stuff. So usually options the volume is not that high. More people buy stocks than options because with stocks, you can kind of sit on them forever. There's no element of time or expiration. With options though, when you invest in options, if the stock doesn't move, or the underlying stock on a call option, for example, if it doesn't move, in most cases, you lose all this money when it expires. The timing expires, which is usually in 30 or 60 days, all the way up to 3 years with something that are called leaps, which are long-term options. And given the fact that there's that embedded risk of losing everything you invest in, the volume is lower in stocks than it is the volume is lower with options than it is for stocks. Okay, and because of that, if somebody buys a ton of options, and they make money off of it, the government looks into it. They look into it as well. And before I talk about Coca-Cola, and we'll look at a real case study with Coke right now in a second, a simplistic one. I remember after 9/11, it was awful. Like I saw the whole thing from my desk. I was on the top or second from the top floor of the most southern building in Manhattan when I worked at Goldman Sachs. It was terrible. Bad memories. But I remember like a week and a half after 9/11, when they opened up the markets again and allowed us to come back to work, I was sitting in front of my Bloomberg terminal. And Bloomberg is just like finance.yahoo.com. Don't waste money on it because you get it for free with finance.yahoo.com. But on Bloomberg, what I did was when I sat down on the trading floor to go back to work, I actually entered in all the U.S. airlines options activity. So I entered in DAL, which is Delta, space OMON, which is options monitor in Bloomberg. I also entered in AA, OMON, American Airlines, Continental, CAL, etc. And I did a little bit of research. I was curious because obviously the airline stocks were down a lot when the markets opened again in mid to late September 2001. I did some research and I discovered that the put option volume, and put is the opposite of call, meaning if you bet a little bit of money, stock goes down, you make a lot. If it goes up, you lose this. The put option volume on the American airline companies 3 days before 9/11 was the highest it's ever been. And so some fucker realized this. Sorry for swearing. Actually, I'm not when it comes to this. Somebody realized this and knew about what was going to happen. And so governments analyze that stuff closely now, really closely. So if there are massive put positions being put on right now on airlines, for example, the government's going to be investigating like right away. So let me talk about options with Coke very, very quickly. Okay, and everything I'm going to show you is data you can access with me for free. At finance.yahoo.com, you can type in the ticker for Coke, which is KO. Okay. So right here with Coca-Cola, we can see the average daily volume is 19 million shares. Okay, so 19 million shares times $60. It trades a lot. It trades like water, as traders would say on Wall Street. Okay, remember that number, 19 million. If we look at the options, which you can do right here, okay, for Coca-Cola, you will see here that the volume is much lower. Okay, 256. And by the way, whenever you buy these things, they're in lots of 100. So you multiply it by 100. But still, the volume is very low compared to that 19 million shares. I mean, the highest volume we have here, what is this here? This is the, this is the number of shares, and this is the volume, okay? The highest volume we have right here, we can see, is the Coca-Cola call options that have a $60 strike price, right, that are kind of at the money. Blue means in the money, okay? A $60 strike price, and this is the March 18th, okay? So you see there that the volume is much lower, okay, and the number of shares is way lower as well. And so the bottom line is, if you put on a big options bet, which according to the Wall Street Journal David Geffen and Barry Diller did with Activision. ATVI is the ticker. They did it a couple days before the Microsoft acquisition in January. If you do that, the government's going to investigate you. And again, according to the Wall Street Journal, they are investigating David Geffen and Barry Diller. And I hope they let Geffen go, because he's been a wonderful humanitarian as well. And he donated a fortune also to UCLA, and they renamed the medical school after him.